you feel a sharp, unexpected pain. Panic sets in, so you log online, pay a premium, and secure a health insurance policy. The common expectation is that this new contract instantly covers the impending medical bills. But health insurance is a highly structured financial product. It is designed to prevent immediate utilization the moment a crisis begins. The system operates on waiting periods. These are non-negotiable clocks built into the foundation of every policy. If you attempt to buy a policy reactively, waiting until you are already sick, these clocks act as prohibitive walls. The money exists on paper, but the system prevents you from accessing it. Successfully navigating a medical emergency requires buying into the system proactively before a specific medical need arises. Relying on a last-minute purchase is a financial trap. The utility of the coverage depends on how much time you have already spent inside the system. The first clock you encounter is the 30-day wall. For the first month of coverage, insurers deny claims for virtually all new illnesses. Clause I of this standard policy provides the only exception. If a claim arises due to an accident, the 30-day exclusion does not apply. The insurer covers sudden trauma immediately. However, internal illnesses are subject to a much longer second clock, the 24-month wait. The policy includes a standard list of conditions. In Source Image 1, you'll see cataracts, hernias, joint replacements, and gallbladder stones are locked behind a 2-year hold. These conditions are grouped together because they are typically slow-growing and plannable. This represents a moral hazard. Because these procedures are often predictable, a patient may know they need surgery months before they actually book it. Without the 24-month rule, a consumer could wait until a surgery is scheduled to buy a policy. This would allow individuals to extract large payouts without contributing to the shared risk pool, eventually making the system unsustainable for everyone. The lists provided in Source Image 1 are structural defenses. They maintain the solvency of the insurance pool by preventing claims from those who only join the system when a payout is certain. The third clock is the 36-month pre-existing disease wait. This applies to medical conditions the buyer already had before the policy started. This creates a legal overlap. If a procedure on the 24-month list is also a pre-existing condition, Clause 3 dictates that the longer of the 2 waiting periods shall apply. In that case, the funds are locked for 3 years. Some consumers attempt to bypass these limits by upgrading their total sum insured right before a planned surgery. Clause 2 of the document addresses this directly. Any enhancement causes the waiting periods to apply afresh to the increased amount. While your original coverage amount might be clear of restrictions, the newly added funds are trapped behind a brand new countdown. The system is built to prevent last-minute maneuvers. Attempting to increase your coverage at the point of need simply triggers a reset of the waiting periods for those new funds. The most effective way to navigate these structural requirements is through continuous coverage. Clause V explains that waiting periods are reduced to the extent of prior coverage. Maintaining a policy without any breaks allows you to satisfy these requirements over time. This makes purchasing a policy while you are young and healthy a practical necessity. When you start early, the 30-day, 24-month, and 36-month clocks expire silently in the background while you are still healthy. By the time a major medical event occurs years later, the policy provides immediate coverage because the mandatory countdowns finished long ago. An older buyer starting a policy during a medical crisis is just beginning their 3-year wait. The long-term policyholder has already cleared every hurdle. In health insurance, time is an asset that cannot be purchased at the last minute. Entering the system early allows these clocks to run down during periods of good health, ensuring the coverage is actually available when it is needed.